All right.
Got a little technology.
All right. Well, if everyone's ready, we'll start the introduction here and get the next round going. So for our next speaker, we have someone that has a pretty legendary track record and performance in the last it's been, I don't know, 12 to 14 years in the real estate space, coming from a career and, well, first off, coming over from India with $7 in his pocket, and growing in a career in actually coming from an engineering background, but growing in a career of public speaking. Then before making the jump into multifamily, he's grown a portfolio. I know it's over 350 million. I'm sure it's probably 400 now. I don't know the exact numbers, but it's up there, and he's still growing, still scaling. And most recently, he's made a big step and a big push into senior living, and he's not doing it on a small scale. He's doing some ground up development with partners, and he's got some really exciting projects going on. He's been certainly setting the trend and following the trends. He's an expert at using the engineering background to find the path of progress, and he sees the next one with senior living. So he's going to talk to us about that and not to mention, he's been a huge mentor to me, someone I've learned a ton from. Has helped me in multifamily a lot. So I want to welcome Vinnie Chopra to take the stage.
Thank you, Dylan. Thank you, Rashad. It's such a pleasure to be in the company of so many successful people. It's heartwarming, and thank you for organizing just a great summit. Virtual world is the world, and I've always believed in it. And we've been managing assets from San Francisco for the last 14 years. When I bought my 14 units for $180,000, as I mentioned in the morning, I didn't know anything about anything, guys. For 14 years back, I didn't know LOI, didn't know cash on cash, anything like that. So I think we can all learn and develop and do well. I am very excited, still very excited about multifamily. I'll be purchasing another 300 million, 400 million, coming up here, because I can raise a lot of money. My world has really been changed because of the syndication world. Oh boy, okay. Well, with this virtual thing, you can't see, you cannot show anything anyway. But that's the book I wrote, Apartment Syndication Made Easy. And a lot of people think that syndication is a hard job. And in my mind, I'd say, just like Rod Cliff said this morning, it's what you think, it's what you're going to really believe. And that's what is going to come out in your whole demur, right? But you could do syndication to do anything. I saw flipping, I saw wholesaling, I saw, single family, all that. If you want to scale up, like from my 14 units of 180,000 to close to 400 million, just in the last 10 years, actually 10, 11 years. And it's been tremendous crescendo right now, where I can raise millions of dollars just over the weekend. Last weekend, I raised $4 million in COVID. In COVID, when people don't want to give any money and they want to save all the money, I just sold out my another project for 3.2 million yesterday. So 4 million week before, 3.2 million again. That's 7.2 million. I'm not bragging about me, but the thing is, if you understand just how to cultivate investors, and just to make sure that they are looking at you, what you're doing and where you're going, and treating them with respect and honesty and the whole thing, that's what has been my single. So we'll just go into presentation. Again, I'm very bullish on multifamily. I'm very bullish on senior living developments, which I'll be sharing with you. Hopefully, I'll convert many of you to look into this sector, which is the biggest sector going to be in the next 40 years. Believe my words, it's been recorded. Next 40 years, this is going to be humongous. So please get into this sector. Hopefully, by the end of my presentation, you'll feel, yes, you want to get into, and the investors will get into, and so on. The third thing is hospitality. I just purchased Hilton Garden Inn in Texas. I'm going to go big times with the name brands. So that's my third business or attack right now. I can buy hotels at pennies on the dot, or not really penny, maybe dollars, much discounts. And that has been a very big thing. In my magical thinking is that apartments, multifamily, hotel is the same way, where you have to pay at the door to get to use the room for the overnight. So it's a multifamily at the micro level. And then same thing is true with the senior housing. What I'm getting into is multifamily in senior housing. That's what I want to talk about, not residential or anything like that. So let's jump on the gun. I'm going to share my screen right here and we'll go right into it. Okay, I hope everybody can see it, right? Everybody can see it. My team really worked hard to put this presentation together. Again, I'm just a face on the top. It's the people that you have, the vice presidents, the directors, and everybody in the team that makes you look good, when you come out to a presentation, and all the businesses that you are running and things like that. I've been a motivational speaker. I'll just give you a little bit background on me, if you don't mind.
Vinny, you want to make it full screen? Oh, there you go. You got it.
Yeah, there we go. Perfect. Again, I started my company about 12 years back, Monil Investment Group, which is, as you can see now, the roof has not down. It's going up to $1 billion. That's my passion, that to get to be that $1 billion company, which I know I will be able to do it. Of course, my name brand is also to smile. I smile a lot, and just the contagious smile. And then, of course, my other companies are management company, Monil Management Company, Monil Hospitality, Monil Senior Living, a multifamily academy, and then Monil Digital Branding Company that we just started this year also. So again, should you be investing in senior living? That's what it's all about today in my presentation. I'd like to kind of tell you who I am a little bit, and then go authority as to what I've done in the last year and a half to be in this space, because it doesn't happen overnight. And then I'll show you what we are building, and then you can ask me lots and lots of questions. So there's no selling involved or anything like that. I just want to let you know, again, disclaimer, this webinar is for educational purposes only and should not be considered as legal or accounting or investment advice, like you all know. Who is Vinnie Chopra? Vinnie Chopra is a mechanical engineer. I grew up in one-bedroom apartment with 6 siblings in India, in Moti Bagh, South Delhi. And I always had a dream to do better in life. We were 8 of us living in one-bedroom apartment and so forth. But we had food to eat and everything, nothing like that. Then I became an engineer and came to United States with $7 to do my MBA in George Washington University, sold educational books, Bibles, door to door, right outside Atlanta. Oh my gosh, that's interesting. Right there in Austell, I was knocking on doors, and it was such a pleasure that 2017, I bought $23 million worth of asset in the same community where I was knocking door in my shorts and things like that. A husband for 40 years. We just celebrated 40th wedding anniversary last month, and we have 2 children, Neil and Monica. Neil went to Cal Berkeley, Monica went to UCLA, and that's what our name brand is. Monica and Neil put together, that's Monil. I'm a California active broker, but haven't sold a single house or anything like that. But I do have a state license. Okay, brought first family, single family rentals 35 years back, started 5, 6 companies, now 7 companies so far, 29 successful syndications I've done, and I'm principal and lead sponsor in all 29. I'm not a limited partner or anything like that. It's all controlling 4,300 apartment doors and all GP interests, nothing LP at all, and worth over 350 million. Thank you, Dylan. Out of these 15 syndications I've done in the last 3.5 years, and I'll be doing about 7 to 8 syndications each year for the next 10 years. That's where my goal is, my aspiration is. General partner in Hilton Garden Inn, I mentioned, principal general partner in Monil Senior Living, vertically integrated at the peak of my, when we had all these, we have sold also, because as I said, I'm sold one in Atlanta and several others in Texas and all that. So at the peak, we had 135 full-time team members in my companies, all the different companies. Again, I've been on a lot of podcast shows. I thank everybody who invite me. I've been on about 142 interviews. I have my 2 podcasts now, sequel to the book that I wrote, Apartment Syndication Made Easy, and then Motivation Talk Show. We are starting the 3rd one on the Senior Living Talk Show podcast, and also Facebook Live show I do on Friday. So that's like 4 shows a week. You can always just Google me or YouTube me, and you'll probably find out. These are my 2 books. The number 1, Apartment Syndication Made Easy, became top seller in just 2 months, international top sellers. My new book is coming out. I've been a very positive person, smiling all the time and all that. That's coming out. My 3rd book, 4th book, and 5th book. We are writing it and all that. So let's just go into senior living. Why do I kind of come on the stage in front of you, and why do I have, what I have to say about senior living? So the key thing is that our company and Build Senior Living, I've been contemplating, I believe in secret. I believe in law of attraction. When you send out so many positive messages into the universe, things happen for you. And that's what happened for me in Build Senior Living joint partnership. I didn't know where to go, but I knew I want to go after senior living. And with the grace of God, I got joined together with a great partner who have built what I was envisioning 23 times, and we'll show you some of the very exciting things that we are able to do. Our total portfolio together is about 600 million right now. This is something just to let you know. I also partnered with Enzo Multifamily, my very good partners, when I bought the $52 million deal from 180,000 to 52 million. You could see that it can happen for each one of you as you scale up with syndication package right there. And of course, that was in Florida. Then we bought 35 million in the tech space, Melbourne, Florida. And then over the years, I purchased so many. These all were bought in just 2 years, under my portfolio syndication. Now, this is where I can really bring clout to what I'm talking about. What we found was that our partner, Imran, has built all these communities in Michigan. He kind of saturated it. He lives in Michigan, and he saturated the market, 22 senior living facilities. And he came to that because he was supplying to senior, assisted livings and nursing homes and all medical supplies. And he would cry at home when he'd come home because the condition was so smelly and bad, and how they were run, and the food they were, I'm not saying to all the senior living, but very poor conditions, 50-year-old buildings and this and that. He says, I cannot take my parents into this senior living. So that's when he started thinking about how can I build real good luxury at a very low price, very nicely. And he sold his business for millions of dollars and got into this about 9 years back. So these are real pictures of all these ones. We just built one in Florida, Cape Coral, Florida, opening next month, just in a few days. And we built 88 units. The build price, all inclusive, was $12.3 million. And we got an offer already without even opening the door to the public, to the seniors. We got an offer for $19.4 million, $7 million profit. We can walk away, give the keys, but we will not do that. We're going to run it for about 9-10 months. We have all the in-house management that runs it. And then we'll probably make 9 to 10 million, something like that. But then Manor of Brighton, 3.7 million, Shelby Township, 3.6 million. So these are all that we already opened back there in Michigan. And these are the other ones in Michigan. If anybody's from Michigan, you could just drive by, see the quality of constructions and things like that that we have been building. The good part is, exciting part is that we can build so many because we have general contractors who have built them over and over and over again for us. So we can start almost 20 to 30 projects a year. So that's pretty good. So we are very excited to build 4 to 6 projects per year in Michigan, in Florida, which we have saturated Michigan already, Florida, Virginia, Texas, Arizona, Oregon, and Washington. That's where we are finding the demographical shift happening right now is into those, all the states where a lot of seniors are moving into. And I'm just on a crusade right now with the future of senior living. I'm putting webinars twice a month. I want to educate the, all the passive investing seniors and other millennials, and also share the truth about why we should be really excited about senior living. As you see, silver tsunami is sweeping the nation right now. Right now, as we speak, we have 10,000 baby boomers that are turning 65 every midnight. Every midnight, 10,000 more people are coming into this space. So this is a very good graph, which we got it from Marcus and Millichap, if I remember, right over here. Oh, where is the source? There it is, Census Bureau right there. And we are at 2020. If you all please look at it, we are 65 plus 56.4 million people. These are all in millions. In the 65, it's going to be 74, 82, 88. And in next 40 years, we'll be at 100 million population in USA is going to be 65 plus. They're going to need some space to live, downsize their homes and all, but they need to be living, and then the 85 is the other range of the our seniors who are assisted senior living usually starts right about 85, 82, 85 to 100 years of age. And that's 6.7 million, 9.1, 14.6 to 20 million people who will need assistance. So that's where, you could see. And also we look at all these different studies. These are all documented, as you can see, chart sources, that stabilized senior housing is performing much better, profitability-wise, returns-wise, even compared to the apartments. I know we have a little bit time, so I'm going to go a little bit faster. Supply and demand, amazing, amazing demand. Even what we are trying to look into, how many people will be getting into this marketplace, there is a huge, huge shortage, supply shortage is going to happen for the next 40 years. Next 40 years. So it's just, 20 to 30. This is 30-year graph right there. And then again, all these graphs are meant to show what is happening right now and how this whole market is going to be more and more and more and more need will be there. I know there might be some questions about COVID, and I will tackle that in a second. Again, inventory, being very low in the last, this is the progress from 1989, what has happened, and with the building permits going high and lower, all that stuff. So just gonna go through quickly so that, and this is the other one with the housing crash of 2007 and 8 and 9, even apartments went down. As you can see, the loss or the vacancy and all that, but the senior living never really was hit at all during the recession. So that's something also right now. I know there are different mixed kind of news about COVID. The thing is that we are not into these categories, no regulations over here in the senior living, age restricted apartments, and then little regulation in the independent 55 plus living over here. We are only in this segment, which is state licensing, and it's assisted living and memory care, not in the skilled nursing, not in the nursing homes, not in the, where the seniors need 24-hour supervision, or not the rehab centers where the seniors are coming back and forth from the hospitals and brought, Corona, contain all that, and that got affected within and all that in our facilities, which are 23 of them, 22 of them, and we have sold some also, but the 14 we managed still, we had zero coronavirus, zero COVID action, because we locked down in time, and even the family cannot even visit their loved ones. They have to see through the window, and because for the betterment and health of the our seniors. So again, this is something about where the nursing care is, the nursing homes, where we found a lot of coronavirus attacks and so forth like that. There are other independent communities, but we are only in the assisted living space. So that's just what I wanted to say. Huge, 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 trillions of dollars industry, and it's bound to increase. We are saying $6 trillion will be spent in this kind of Medicare, Medi-Cal, all the prescriptions, the housing, everything. It's a big, big business, which is going to be humongous. This is only 7-year projection. And we are right over here with 4 trillion. It's going to become 6 trillion just in the next 7 years. So overall, I hope you're kind of a little bit excited, like I'm talking to you, but let's talk about multifamily, and it's my bread and butter. And I'm going to be buying multifamily also. But I'm really, really excited about when I build the brand new assisted living with my partners. And look at that, it's A-class building, A+ asset class, already built multifamily C, B, or B+. Income potential is lower because we get $1,300 rent or $1,400 rent. We get $4,400 or $3,800 to $4,400 here for the same space. Of course, there's a lot more services and all that, caregiving, food, everything. I'll show that to you. Concessions, medium to high, zero concession. Delinquency, zero. First of the month, we get all the money for all the occupied residents right there coming into the checkbook, into the bank. Demographic, working class, which I've been chasing and I'll still be chasing. Tech jobs in Austin and in the Florida area and Atlanta area, all that. But non-working, I don't have to worry about it because they are already retired. They have made their great life, and they have the means to get into assisted living and so on. Average stay 6 to 12, 13-month leases for renewing. Our average stay is about 2 years to 2.25 years actually. Maintenance, medium to high, none, zero, because we just built it brand new. Deferred maintenance, none, can be a lot. Turnover, low, very low right here. And then medium to high. Investment hold time in our investors' money, only 2 to 3 years. Then we flip it and sell that, put their money into the next one. And it's a 5 to 7 year hold here. Average IRR, 9 to 13%. And that's 16 to 19% IRR. So those are just some of the factors. And senior living opportunity outlook, again, has outperformed all real estate classes since 2007 and will continue to post-COVID-19 also. There is strong demographic shift. There is strong demand. It's strict health policy. Actually, we started 6 locations in Michigan, yet this year, they were shut down while we were building it. Then the mayors of the city gave us special letters that it's a critical need and we need to keep on continue building it. Wow. Even during COVID, when everybody was stopped and everything, we were still building over there and so forth. So very low risk, in this housing and higher investor ROI, which we just talked about. And again, I can talk more and more about it. If maybe questions come, I can share more my news about the COVID, which has not affected this particular segment. And also because we don't have elevators in our construction. We build only 1 story. That's the real recipe for the luxury we want to provide to our seniors, is not going up and down, in the elevators and getting a waiting time and effective time and all that. But then the exciting part is cost segregation, because there is so much furniture and so many appliances and this and that. So cost segregation gives huge tax write-offs for our investors and for us. And there is a 1031 exchange that we can do, because we'll be building so many every year, 4 to 6 or 7 or 8 every year. So there'll be always an opportunity for the investors to go into the next one. Self-directed retirement funds can bring it in and all that. That's our new podcast. We are starting globally, actually. And that's Innovative Senior Living Investment Show. And that's going to be featuring starting in June forward. So please look into that. That's going to be aired twice. So we're going to do it Thursday night, and then also on Saturday, it'll be also aired. And we want to spoil the generation who has spoiled us. That's our motto. That's our real motto right here, which we are very excited about. Let's just go into now. This is Punta Gorda. We just built one in Cape Coral. I would love to kind of share with you. Oh, this is the slide. Oh, this is how we build it, right from scratch, from the building permits and everything, getting the ordinances cleared, all that we buy on our own, millions of dollars, the land and everything. We only raise money when we are ready to put the shovel in the ground. So that's about 6 to 7 months it takes us to get the site ready, permits, everything ready. Then we raise money. We build it in 12 months to 14 months. All these spectacular buildings that you see right there. This is actually right now in Cape Coral that you just mentioned, that the REIT is willing to give us 7 million won or whatever I mentioned. So these are the pictures outside, and then inside it's like a 7-star resort, 5-star, 7-star resort for the seniors. High ceilings, chandeliers, dining rooms, the game rooms, the lounges, and all these are real pictures, the colors and combinations, and the movie theater. We built movie theaters in our senior living, the spas, we build those, we build salons, and then we build libraries, and then of course the private dining halls and lounges for the seniors to really feel belong to that community of 88 or 90. We only build that small number because we want it to be a very good community, like a family with the seniors. And then we have about 55 to 60 caregivers also at each facility that we own. So that's the one, build our own. And then the sunrooms and the colors, everything is just so exciting. And then it's single story always. We duplicate it everywhere we go. So our left side is always a big compound or courtyard with walkways, larger size walkways, so that 2 wheelchairs can go, past each other. The waterfall function, very nice, all trees and all. And then we also give our seniors to get involved in planting vegetables or flower beds and things right outside their unit. The middle one, like in Florida and other states, we are able to put swimming pool with the lift and everything. It's just a recent picture. We have, and the benches and all that, arbors, that's the middle section with the water fountain and all. And then the putting green and everything. And a butterfly house is not here yet, but that's the one we put over here also. That's our memory care side division. Usually on the right side, we have memory care. On the right, on the left side, we have about 60 to 66 people, which are assisted living, and then memory care on the right side. So just very, very high quality, studios, 1 bedrooms, 2 bedrooms, ample, space, closet space, all that. And then with all commercial kitchens. That's the other part. We have 2 kitchens and dining halls, and we have chef and all the people, like that. That's our team right there. Imran, my partner on the left of me, and then John Rusin, who is also our partner in the senior living, who's also my vice president of the academy. We're really proud to have them. So actually, I'd like to just go one more slide back, and I'll open up my question answers for all of you. This was the one. Sorry. Okay, I just got it. There it is. Okay. Now, I do want to kind of mention it. What does that $3,800 a month, for example, or 44, I mentioned that also in the presentation. What does it include? It includes everything. Amenities and services included in the monthly rents, all utilities, all included except the telephone. Just the telephone is their own. And then 3 daily meals are included, nutritious meals, and snacks and coffee and tea. Housekeeping, everything is included. Laundry is fully included. Linens on their beds and everything fully included. Basic assistance with the activities of daily living, ADLs, very, very popular, very, needed. Exercises in the morning and, just the whole schedule, like you're living in a resort. That's how we run these communities. And social and educational and cultural programming, we bring the guests from all over to come in there and talk to and really make it fun for the our seniors. And then scheduled transportation, we buy vans, our own vans for each facility, and if there are 2 or 3 nearby, then we share the van like that so that they can have free scheduled transportation. Everything is free. And then their units include universal design features with the ADA and all that, emergency pull cords right there, high ceilings, kitchenettes with cabinetry for small refrigerators, no stoves. As you know, they don't have to cook because assisted living, as you know, it's when a husband passes away and then the quality of life is going down for the surviving partner, the female, and then the family gets together and they say, oh, wow, we got to move you into an assisted living. So it's the very first stage when not too much help is needed, but they cannot cook or they need to be reminded about the medication or things like that. But we don't even need to have nurses at all at our assisted and memory care, facilities. But we do have 3. Over and above what's called for, like even our, I wanted to mention that, caregivers, state requirement is like, I think 2 for 16. And in our facilities, we put 3 caregivers for 14 residents. So that way, how we have 24-hour operation. So it's like, 2 shifts. And that's why we have 55 to 65 caregiving, people in each. And they become a bond with the families and with, it's just a community feeling, not just living alone and well taken care of. Ample size closets with the storage in the bathrooms and all that, private bathrooms in every unit, no communal bathrooms and things like that. And then lounges, like you just saw, movie theater, library, club room, salon, spa, nurse's office, and then gazebo and outdoor seating. And then, of course, conference rooms, public, private. So that's what we really are trying to build quality in the structure so that as we open up, usually we are 60% pre-leased. Wow, 60% pre-leased before even we open the door. And then, in this kind of quality construction, it's not uncommon that we get to 90% or 80 to 90% within 8 or 9 months. So it's a very, very, good market, everything. And I just kind of given a complete, to you all. And here I am, love to answer. Oh yeah, okay, good. It's 10:43. Dylan,
Yeah,
buddy, I'm all yours. And please, any questions from your very
we
special.
got a few. You made great timing on that. Definitely a ton of content covered there, right? And I love that you hit on the different types of senior living because a lot of people just bucket it all into one, right? But it's very, very important to be aware and to identify which type we're talking about. There's independent, which, like you said, 55 plus. There's assisted living, which has the caregivers involved, and there's actual nursing homes, which have required nurses on site, right? So I think that's really valuable for everyone to know and understand the differences between them. And we have a few questions here. We have one from Rafi, who's tuning in from Tel Aviv, and he asked to discuss cap rates and how those are comparative to multifamily. And then what are the loans like comparative to multifamily?
Excellent. Very good point. Very, very good. It's a loan to construction, right? LTC. 75% LTC we are able to buy and get. I just got 4.32% from most of the, there are some banks actually in the United States. They really have special departments for health care, this kind of assisted living. They love to give those. So, and also some REITs are also able to give us loans. Fannie, Freddie, they don't really give construction loans like these ones at all, but we do have some family offices now. They're also willing to give us loan. So I would say these are very good loans, 4.32, 4.5, 10-year fixed, by the way, the term sheet we just got. And then also, we raise only like, 4 million each project. That's all we need to raise. And we have a lot of money ourselves, Imran and myself. So we do all our research, all our architectural drawings, all the feasibility studies, everything on our dime. So if we find out that it's a no-go, even at the city council level or anything like that, then we stop and we lose that money. Nobody else loses. And then we bring the money only when we have permits. So loans are fixed and some are interest only for 24 months, which we look for. Mm-hmm. Usually 18 to 24 is very common because we can build these structures for 12 to 14 months, just like that, clockwork, Yeah.
And what is
cap rate. So the
cap rates, and also you're probably selling it before any kind of a refinance, I imagine.
Oh yeah, we are.
Okay.
Yep. We are. It's just like I would say it's a process of 6 to 8 months for us to get ordinance and changes and all that permits. But then when we start shovel in the ground, it's 12 to 14 months right there. We manage it for 9 to 12 months or 18 months. Our goal is to sell it in 2.5 years or 3 years. Mm-hmm. Mm-hmm. And the cap rate, when you say cap rate, actually, I'm glad you're saying that. What is cap rate? That's the valuation, right? And divided by the NOI. So the cap rate actually goes down. The value of the property gets bigger and bigger as you get into operation side also. I want to mention it. Even though now we are getting this 7 million profit, as I just shared with you, without even operating it, right? So cap rate is going to be so low, we can make 10 million actually. If we keep on, getting these to about 80% or so. This is like with 0%, we're making, so it's a pretty lucrative field. Yeah.
And then once it's stabilized, I imagine there are higher cap rates in multifamily because it is more intensive as far as the labor, right? I imagine it probably trades a little bit higher, would you say, or no, comparative like A-class multifamily?
Okay, no, it will be actually, I would say the valuation, Dylan, would be much higher than multifamily.
Right.
Let me tell you why. Because inherently, as you know, NOI is based on the rents collected, right? Minus expenses plus other income, additional income. The biggest factor I would like to tell everybody is how you operate this particular segment, right? If you have good administrators, very, lean and mean staff and everything, very focused, just like we've been doing for the last 12 years in my companies, that's how we have. Our lenders have told us, you say, are you crazy? You could build it for so cheap and you can manage it also at that ratio. So that's what it is all about. Our NOI is so strong, so these will perform much better than multifamily. If one to own it and then they want to keep on, running it, they're going to make their valuation go way higher than a brand new multifamily property. Yes.
Excellent. We have a question we have a bunch of questions rolling in here, but next one we'll take would be, if Tony, I know you asked a question in regards to doing a deal and then renting it. I think he says he's in the car right now, but have you ever considered just doing the believe, the development and then renting it to an operator in a sense. Is that?
Oh, yeah, for sure, for sure. Actually, we do, supervise, and many times, because, my partner is in Michigan, right? So we are able to bring our staff to train the local staff whenever we are building, like we just built in Cape Coral. And, I sold out over the weekend $4 million for Punta Gorda. So we are doing now the groundbreaking of Punta Gorda coming up in July 1st. Williamsburg, Virginia, you might have seen some name there. That is, we are breaking ground in August. And then we just are also bought the land and we are going through the process. Palm Bay, Florida is our next one, which is going to come in September. We break the ground there. Then Sebastian, Florida, we just bought 12 acres of land. Last week or 2 weeks back. And we met with the city officials in Sebastian just 4 days back. And they said, it usually takes 8 months to get through all the clearance, but we will put you on a fast track to get you permits in 3 months. In 3 months. It's ridiculous. There's so much demand for these. And then we also saw another land in Merritt Island, just opposite to Jacksonville, St. Augustine, and we are buying a land there. So we will be building there also. Then we are coming to, of course, Virginia, more places, and then Texas. We are Fort Worth is our next target right there. Austin, all the different places, and then we'll come to Arizona.
Excellent. Excellent. I'm just going up the list here. I know we have a bunch piling up here. We have Amit Patel asked, do the people that live here pay out of pocket, or is it part of the government? So yeah, are you using government assistance, Medicaid, Medicare, or is it all private?
I'm so glad you're asking that question. I should have covered that. It's all private. Majority of it is private. Medi-Cal and Medicare is very small percentage. Most of these come from revocable trusts, or they are downsizing their home as they get older and they cannot take care of it and so forth. So reverse mortgage, long-term care is another aspect. 30%, I think, or 25 to 30% even given by the family, because the children and so forth, they pitch in and have that money ready for their mom and dad to be able to live in great communities. The exciting part is that we are building luxury at such low price that we can actually, open up in the location where it's 47,500, I think, household income, not very rich people, and 3,800 to 4,200 is normally what the people are charging in that community for the 50-year-old, buildings and things like that. So we are able to really, come at a very good price range, and that's how they are. Yeah.
Excellent. We have Siri asking a few questions here. I want to see if Siri maybe if I can unmute you to jump on. Let me see if you're around. You are unmuted, or Siri, are you there to ask?
Sorry.
Oh, there you are.
Hi, Vinney. It is so nice listening to you as usual. You're an awesome presenter with a good information. So my question is, how is you covered one of my questions? What is the hold period usually? So as you mentioned, it is 2.5 to 3 years.
Yeah. Yes, 2.5 to 3 years, sometimes even 2 years, because we are finding so many, just to kind of let you know one more thing. We are building one in Michigan. It's only 45% constructed, 45%. Cape Coral is already built, right? And we got an offer maybe a month and a half back. In Michigan, we got an offer, LOI, to give us so much profit, and it's not even built yet.
Wow.
It's only 45% built. They said, we'll give you an LOI right now, and you don't show it to anybody. We're going to buy it, keep on building it. We are very excited about it. So it's interesting. Yeah.
So exciting. So, it's so exciting to listen to you, Vinney, because you are very excited about the projects.
Yes, I am. I really am.
And one other question I want to ask is, how is the Atlanta market for senior living?
Excellent, excellent. See, the thing is, what we do is through data points. That's the real key. We are looking at all different, data points throughout the United States and look at where the migration is happening, right? There's a big book, right? The big shifts ahead. A lot of things are happening, and then a lot of big data is coming where the 85 or 80 years of age and plus will be shifting to for the next 40 years. So that's how we look at and segregate different markets. In Georgia, we have not really concentrated. I think in whole Georgia, probably Atlanta would be terrific market. But at this time, we are really positioned to go to Virginia, bigger times, Florida, very big time, and Texas, very big time, and then probably come to, Atlanta also. But I'm pretty sure every community needs that, I mean, that's the thing. Yeah.
Great. One last question, Vinney. So usually when you are constructing a project, do you usually build like 80 to 100 units? What is the number of units you start with?
Very good question. Very good question. See, when we find out through the data points that this is a particular community where there will be growth in the senior population who would like to, live there, of course, or migrate there, we go ahead and spend a whole week in that community ourselves. And then my partner and us, we go and we visit all the communities, assisted community services buildings which are there, businesses. We go and see their conditions and what they're offering, what's their price point and everything. We do our internal studies, and then we send it out to external studies, also pays thousands of dollars, because we don't want to be wrong. See, because we are starting to do all these changing of the ordinances and getting the permits and everything. And then it's taking us 14 months to build it. So the product is coming about 2 years later, right? So when we find the demand is for like 1,000 or 1,300 units for assisted senior living, we only build 8%, 8 to 10% maximum in that community. So that is our really strong suit, is that we build very short, only 8 to 10% of what the need is going to be. And that's why we are coming out as winners.
Great. That's a great calculation. I need to learn from you. Thank you very much.
Thank you so much. Thank you.
We have a lot of questions pouring in. If you don't mind, you can just unmute yourself and ask. I know we have a few people that have questions. Feel free to unmute, ask away. We'll give it another. Rashad, we good with another maybe 10 minutes or so?
Yeah, for sure.
Okay,
thank you.
Great. Yep, I'll give you some more time. If so, I know Omar, you had a question. If you want to unmute and maybe you go next. We have RB with the question after that.
Yeah, thank you, Vinney, for the excellent presentation. I was just curious to know what is the structure, or what the structure looks like for the investor in terms of returns.
Wow. Oh, I'm really glad. Again, I'm not selling anything at all. I want to mention that, but we have very spectacular returns in the sense that, as you know, development always has been very exciting field. People are able to make a lot of money in developments, as you all know, and that's the same thing with us also. But we are able to give as high as 11% preferred. Hold on. Here, I've been selling multifamily to my investors at 7% preferred, right? And in this one, I can give them 11% preferred starting from second year, or 9% preferred, or 10. We always have done a tier investing. My 100,000 to 199 199,000 investors are class A. From 200 to 499 are class B. And then my 500 plus investors, and I have several of them now, and they are in class C. But they're all limited partners. They're all preferred partners. All of them are. But we give like first year, it's dirt. So there is no return on the first year. So sorry, but you make it up in the second and third year. That's the exciting part. So the average return on investment is 54% or 57 or 63% return on your money in 3 years. So it's almost like 19% IRR, counting all 3 years, even though our investors don't get paid at all on the first year. But if you get 63% divided by 3, that's 21% you are making every single year, and it's all preferred. Hold on. Oh my gosh. So what we are saying to the investors is, you don't have to just take an IRR and what's the other one? Waterfall, or, after reaching like 13% IRR, it's going to be split between 50 and 50, or, 60-40 or things like that. We are giving them straight away returns on the silver platter, that they're going to make cash returns second year, third year, and equity gain preferred also. So we are giving 40% of the pie, no matter what happens to them.
Thank you very much. And one last question, if you don't mind. And it looks really great. But what are the risks? What are those things that an investor needs to be concerned?
I'm so glad. Risks are always there in real estate, as you know. But the biggest risk is if we are faltering ourselves and starting to construct in a market which will not have a demand. That's the number one risk. And we actually are spending thousands of dollars and, of course, millions in locking in the land and everything. So a lot of risks are in our thinking first, before even we get any dime from the investors. So for investors, there are no risks. Once we start putting the shovel in the ground, we give monthly reviews and the drone footage and everything out to our investors, and they could go on the portal. They can see everything happening. Of course, if there is a fire is a risk. And it happened in one, I think. But that doesn't matter because we have whole insurance. So insurance was able to come in wherever the small portion we were building, it got on fire, we fixed it up and we moved on. So that's the other risk, right? The third risk I can think is if you cannot really lease it up, right? If you cannot lease it up, then it's an empty building. Nobody's going to pay any price for it, right? Or the valuation will be zero. So that's when we start about 70% built or 75% built, we start advertising. So we have a marketing arm that goes out and advertises locally and start getting applications in. That's why we have about 50 to 60% pre-leased occupancy before even we open the door. And I would love to invite all of you who are on the call to come join me in Cape Coral. We'll be doing the ribbon cutting ceremony in July after COVID, walks away. We'll have videographers and mayor of the city and every official. That's what I've been doing all my life, also in multifamily. Whenever I do renovations, I have the band come in, I have everybody come in and just make a big whole drum in that community and change the name of the property. I've done it 26 times, and so on. So it's done a lot of fun. Sorry, I hope I went into tangents there. But the risks, well, it's a limited risk on the part of the investors. Oh yeah, the other thing is, what if I could not sell it in third year? Guess what? We'll buy it. Imran and I will buy it. We have such high net worth. We could get up to $100 million to $130 million loan now, just two of us, no other partner. So we can actually refinance, pay our investors back their money, and then we'll be able to own it, and then we can sell it or we can manage it. So there is almost no risk at all.
Thank you very much.
Thank you. Thank you.
All right, we have time for maybe one, maybe two more. Who else wants to pop in here? I know we had Jonas with the question about some of the expenses. Jonas, if you want to unmute yourself.
Oh, sure.
Tony Morgan had a question as well.
Yeah, Tony asked about the 11% pref. Is that the first, when you said the first year, is that the first year after construction's complete, or is that just the first year in entirety from the moment you're breaking ground?
Excellent, excellent, Dylan. Actually, the first year we give 0. So it's a 0.
But the first year is the year that you're building, the time that you're actually developing. That's what you're saying for the first. Okay.
It's the second year they get that 11% and then 12% of the 30 and 500 category. I think it's 9 and 10 in the $100,000 category, and then 10 and 11 in the 200. So it's tiered. So it's a little bit bigger, money given back to our investors if they go bring with bigger dollars. That's what I believe in. I believe in, if I can really take as many few investors, then it's much easier every way around, right? And that has been my mantra. I have some people spending now 700. I just heard about $1 million investor, into my senior living. Yeah.
Excellent. Jonas, are you there on the line? Do you want to unmute yourself to ask the last question? Bring us home.
Yeah, I just had a quick question. If you can maybe speak on the comparison, some of the higher expenses, or if they are much higher, like maybe some of the insurance requirements or government requirements that go into the facilities.
Good point. Very good point. You're right. Honestly, the insurance will be a little bit higher. Of course, we have to property insure like an apartment, but then also as the operation. Now, we always distinguish and take the property out of the operations. So we have to make sure we are doing it correctly. We don't want any litigation to affect the property where our investors' money is tied to. So we have another LLC that manages the operation, and we have had no problems at all in the last 10, 11 years we've been managing. We are actually at the top of the list in Michigan. Our response time is, I think, 20% of the highest response time. So ours is the shortest. And the people that visit our facilities, they say, how can you do it? I mean, it's how you manage the staff, how you have the administrators and the regionals and everything. And then the caregivers are provided all the guidance and everything, right? So you're right. Yeah, insurance is a little bit higher, but also please remember, instead of getting $1,200, you are getting $3,800. So there is such a big gap. Every month, you have such a big gap to pay for the food and other facilities and the caregiving and all that. So the profitability is way, way higher.
Excellent. Well, Vinny, you've clearly generated a lot of interest, a lot of questions flowing in here. I know your contact info, you're widely available, easy to reach. So if you have further questions and you get a chance to it, I did put the Amazon link to your book in there. So hopefully everyone gets a chance to pick up the Syndication book. And reach on out to you. If you have any final things you'd like to mention to the audience, or
I want to really thank everybody who is present today, and if you'd like to share this across, my real goal right now is to have millions of people really looking into it and helping out, because shortage is so huge, and I think it's such a big pie that a lot of people can come in this space, and we'll all be doing well and helping our generation. The generation that really spoiled us, we want to spoil them rather than them living in the, older stinking facilities. We want to build luxury, and give them what they really want as a belongingness and really enjoy their, later part of life.
Awesome. Well, thanks again so much, and we appreciate you jumping on here and making the time for the rest of the group here.
Thank you, Dylan. Thank you, Rashad, for organizing such a great summit, and congratulations to you and everybody who participated. God bless you all. I'm right here. You could just email me, Vinney at vinniechopra.com. That's my website. We have a senior living seniorlivinginvesting.co. Several other sites are coming up. Please listen to us. Also, we're writing a book also that should be published on the senior living, and then the podcast and all that. So yeah.
Thank you, Vinny, man. We definitely appreciate you coming through and enlightening us on the senior living aspect of real estate.
Thank you, everybody.
All right, Rashad, we taking a quick intermission, or are we going right on to the next one?
Let's take a quick 5 and get back to it at 2:15.
All right, sounds good.
All right.